Eric Muathe for the weekend of September 7th and September 8th, 2014. Let's take a look at the close on Friday. Dow up 0.4%, NASDAQ was up 0.5%, and S&P 500 also 0.5%. Gold was down 1.23%, and the VIX was down 4.3%. For the week, we see that the S&P 500 was up 0.22%, and for the week, the NASDAQ was up almost, let's call it unchanged, but 0.06. So the NASDAQ was unchanged for the week, and for the week the Dow was up 0.23%. So for the week, not a big change. Now this is the current weekly chart for the Dow. Just want to sensitize you to the top of the weekly RSI, and you can see it nicely connects the tops of the highs going back to beginning or early to mid 2013. So we are right there. So if the market cannot move above that level, you'd expect this to be a pullback territory. And if I go back and show you the 2007 high, so this is, let's take a look at October 12th, 2007. This is a weekly close. You can see the Dow was breaking out, closing at fresh weekly closing highs in 2007, and yet it was unable to move above the previous break level. So this break level had led to some serious pullback here before a snapback rally, and so the break was being tested. It was straight line from the break. It's come back to this level. So now this is how the market closed for the week, 12th of October 2007. Let's fast forward 1 week later. The Dow was down 4%, and now you can see that your chart is showing confirmation of that resistance. Just like the current market, maybe the Dow could eventually go on to show us resistance and confirmation of that. And as you can see, in 2007, late 2007, going into some time early in 2009, and so the market had made a higher high. Let's not forget that in 2007, higher high with a lower low on the technicals, and that was good enough for the high there at 14,000 back in the day before this plunge. So if you go to the current weekly chart for the Dow, you can see some similarities. There was a break beginning of 2014 there, which was before this, let's call it moderate pullback, and just draw a straight line. You can see if we cannot hold this level and drift lower, this could turn out to be a serious high. Why? Because you're making higher highs and the technical picture is not improving. So my thinking here is that if the market does start going down on a week-to-week basis, we might be looking potentially at a significant high in the market. Let's take a look at the NASDAQ weekly. We are still holding above the previous weekly closing high, just under 4,500. So that breakout is now 3 weeks old, and the market has had 3 back-to-back positive closing weeks since the breakout, which is good. Previous breakout held, so there was an entry level there on the weekly for the NASDAQ, which held. It was tested there and also held. The one thing, just like the Dow, that I'm watching here is the fact that the market continues making higher highs in price. So we are making higher highs on the weekly chart, but the technicals have been making lower lows. If the market is going to go higher, it does need to stay above 69.10, which is what it's doing right now. Otherwise, a move back below 69.10 could confirm some type of a double top, and that double top comes from this line. There was a break there, so that break corresponds with a shallow pullback there, and so we draw a straight line from the shallow break point, and you can see that there's a possibility that eventually we might form double top on that line, especially if the market rolls over like that. Other than that, the market continues looking good, because if you can take a look at the MACDs, both of them are above zero on the weekly charts, which is a sign of strength. Take a look at the NASDAQ daily, and it continues acting well. You can see that this is where the 50-day moving average is, and as long as it's holding above the 50-day moving average, that's a good trending market. Really nothing too bad about that. Slightly here you can see that we are making lower lows on the daily RSI as the market is making higher highs. That could be a problem. Now if you take a look at the NASDAQ hourly, you can see that it makes sense that the market came off the lows of the day, because if you take the lows of the RSI on an hourly chart, draw a straight line, you can see that it touched that level very nicely on that level and bounced. So maybe hour to hour the market also wants to move higher. Take a look at the MACDs on an hourly chart. If this market can move above zero, if it can do that, that will be good for the bulls, because one of the MACDs is already above zero. So it needs both of the MACDs to be above zero on the hourly if the market is going to do well. Let's take a look at the Dow weekly, and you can see the line I was showing you. Here we are making higher highs in price, but there is declining RSI top lines resistance. This could be a problem, especially if the market does not move above that line. If it moves above that line with a breakout, that's exactly what the bulls want to see. And if you want the market to go down, then you'd like it to confirm resistance by stalling around here and trending lower. I look at the Dow 30-minute chart, and you can see that there's this line that we talked about, I believe, last weekend. Previously there was a breakout above this line and an entry level somewhere here. Extend the same line and you see it gives you the most recent lows on a 30-minute chart. We touch that level, which was this nice perfect entry level if you're a day trader. Another support level there for anybody who's playing the market from a short-term basis, and we've been since then holding support on the line there, which is this lows, and we come here over the last couple of trading hours. On Friday early in the morning we hold that level, and the market seems to want to bounce. If you take a look at the MACDs, both of them are now back both of them are back above zero on the MACD on a 30-minute time frame. I think if you take a look at this short-term basis chart, more than likely it says the market wants to move higher. I look at the transports, and the Dow transports do show another weekly breakout. So it's breaking out above the previous weekly closing high of 84.28. You can also see that the RSI is now back above 69.10, showing that this is a momentum to the upside. If you take a look at the daily, seems like there's a daily RSI breakout. So we were expecting resistance on this top, on the tops on the daily RSI, but now we've moved above that line, which means it's a breakout. It would not surprise me that the market pushes higher just based on this one chart here, because the daily looks good, and if it can just hold above this line, then it could also be seeing higher prices over the next couple of days, next couple of weeks. Let's take a look at the S&P 500 weekly. And you see, just like the Dow, we are making incremental new weekly closing highs there, and yet the technicals are not yet, as of right now, making a move above 69.10. So if we have negative divergence, it could be a problem. Also, there's a channel that we've been talking about for a long time, which is there, and that's a parallel channel to this line. So it seems like this has always been resistance over the last couple of months, and maybe it'll continue being resistance. The key here is this negative divergence if the market confirms a pullback from current levels. Don't forget that the most recent bounce in the market came when this line held, and we talked about the market could bounce. When it hit that level, it did bounce, and so not surprising that the market is coming back and tagging new highs. On the S&P 500 daily, in fact, let me show you the Dow daily. Must have skipped that. The Dow daily also shows some type of daily resistance possibility with the tops of the daily RSI coming into contact with where the RSI is trading, and also back test of this level there. So if the daily continues showing resistance here, more than likely we see this market pull back. So go back to the S&P 500 daily, similar type analysis, and you can see here making incremental highs on the daily, but the RSI continues making lower lows. There's also possibility of resistance level right there, which corresponds with their previous break level there. So if the market cannot move above this level, I would expect it over time to actually show a pullback. If you take a look at the Canadian market from a weekly standpoint, we had a down week, but we are still above the previous weekly closing highs on a breakout level. So the breakout continues to be in play, which is good. And we see that on the monthly, the RSI continues being strong as of now. The only problem I can see here is on the daily for the Canadian market, and just like some of the US markets, making lower lows on the RSI while prices are making higher highs. So as long as this is looking like negative divergence, more than likely we might get a pullback also in the Canadian market based on the dailies. Now if we take a look at, let's take a look at the market just generally on the monthlies, and you see the monthlies continues being very strong for all major US markets. You can see here that the NASDAQ monthly continues trading above 69.10. It is also above the previous monthly closing high, so that's a good breakout. Take a look at the SPX, and you can see that the breakout on a monthly chart continues to be in play, and the RSI continues holding above 69.10. Take a look at the Dow on the monthly. We can also see that the monthly RSI is above 69.10, and also that the price broke out about 1-2 months ago. So as long as it's holding above that level, this is a market that could do well over time. Now let's take a look at Apple. On a weekly chart, you can see that it had a pullback. The RSI is now back below 69.10. But since the entry point was from this recent breakout, and the price there was 97.49, so which is this weekly closing high there. As long as the market is holding above 97.49, it should do okay. Because if you take a look at the daily, you can see that this is where it could find support based on the previous entry level. Nice entry level there. So that is an entry level with that gap up, and that's around the 50 on the daily RSI. If you draw a line from the previous ideal entry point short term, you can see that every time we've come back to this level, Apple has had, so let's draw this line again. Every time the market has come back to that level, it seems to find short-term lows and it moves higher every time over the last couple of months. And you can see right now holding above the 50, and if it does that, more than likely this is where you want to go long, especially if you're a day trader trading this stock. Over the next couple of days, a week or so, it could see higher prices just based on the fact that this level here is holding. If it breaks below that level, then that is a change in sentiment, something it hasn't done since May or April of this year. So it's been holding on the 50. Looks like it wants to hold on the 50 this time. Anything below 50 could suggest a sell signal.